Hi, I'm James Smith, CEO and Managing Director at DRA Global. Today we were pleased to announce our full year results for the period ending 31 December 2023 and provide an update on our strategic progress and future outlook for the business. DRA is a global multidisciplinary engineering, project delivery and operations management group focusing on the mining, minerals and metals industry. Our core strength is our talented workforce of more than 4,200 people across 5 continents. We bring deep expertise in base and precious metals, battery minerals, rare earth elements and bulk commodities. Our team maintains world-class capabilities across mining and processing, engineering design, project delivery and operations and maintenance services. With an extensive track record spanning 4 decades, DRA has successfully delivered more than 8,000 projects, studies and managed services solutions globally. I'm very proud to be reporting on a strong set of FY23 outcomes, which reflects continued strength in underlying operating performance across our business units, which has built consistency in group revenue and profitability and delivered value to our shareholders. At DRA, we are committed to fostering a culture of continuous safety improvement, focused on active leadership participation and ongoing implementation of awareness programs to help reduce risk at the front line. While this approach has resulted in a 39% improvement in total recordable injury frequency rate from FY22, we recognize the importance of constant vigilance and are deeply saddened by the fatality of a contract partner employee in Saudi Arabia during July 2023. Our dedicated teams across the globe have delivered an exceptional operating performance that has generated back-to-back profitable halves and a return to stable earnings. Consistent revenue generation, coupled with a clear business focus on our quality of earnings, has resulted in a materially improved EBIT and NPAT outcome, with strong cash generation enabling a reduction in gearing to well within our target range. I'll now hand over to our Chief Financial Officer, Michael Sucher, who will provide further commentary on our financial outcomes.
Thanks, James. Let me start by saying how very proud I am of the achievements of the DRA team throughout this financial year. As James mentioned, the group has now successfully delivered 3 solid halves of profitable performance, with the group's revenue continuing to be well diversified across geography, client and commodity. A strong FY23 statutory EBIT outcome of $47.9 million is well up from the $1.5 million in the previous reporting period. When adjusted for impairments, pre-IPO litigation costs and a fair value gain on the upside participation rights, FY23 underlying earnings increased to $51.4 million, representing a significant improvement from the $7 million reported in FY22. All of our business segments maintain profitability through both halves of FY23, with the majority outperforming expectations. Active cost management ensured core corporate overheads remained stable despite the continuing inflationary pressure. However, additional provisions were recognised in relation to certain legacy items. The important takeaway from this year's results is the stabilisation and marked turnaround from a challenging first half of FY22. 3 consecutive periods of strong profits and margins have set a solid foundation for the future of the group. On a segment basis, we can see that a continued focus on quality of earnings delivered a positive trend through 4 halves of reporting, with EMEA and Minipex continuing to drive the strength of our earnings. Stability in the APAC business is a result of the renewed focus post the divestment of the GNS engineering business in the second half of last year. These outcomes highlight that our strategy of ensuring geographic and commodity diversification, coupled with a focus on our core capabilities, positions us strongly to navigate market fluctuations and enables us to capitalise on emerging opportunities for our service offerings globally. Our strong operating performance and prudent management of working capital has delivered a solid year-end cash position. Our cash balance has grown to $178.8 million, representing a $44.4 million increase over the period. Positive cash flows included operating inflows of $97.6 million and $16.2 million in legacy financial assets collected during the period, while payments for taxes and capital expenditure were at similar levels to last year. These strong cash flows enabled the full repayment of the outstanding global banking facility and a significant reduction in the outstanding revolving credit facility balance. As a result, our debt position reduced by $32 million and lowered our gearing to 7%. Financial and operating discipline remain a priority going forward as we continue to focus on quality of earnings and cash flow generation. We remain committed to sustainably growing our people and our business, while targeting attractive capital returns for our shareholders. A capital management review is currently underway to determine the optimal return mechanism for our shareholders. Going forward, our capital allocation priorities also include maintaining balance sheet strength, retaining and investing in our people, maintaining gearing ratio within target levels, sustaining our base working capital, and continuing incremental capital investment on near-term growth opportunities. Thanks, James.
This operating and financial stability provides a solid footing from which we can deliver enhanced value for all stakeholders with a continued focus on our core EPCM and O&M capabilities globally. The bulk of our improved profit generation stems from our core EMEA projects and Minipex businesses, with the APAC business now contributing after a return to profitability and solid profitable growth delivered by our Americas business unit. Our geographic footprint improved, with strengthened capacity in North and South America and continued organic growth in operations. Importantly, the Americas business unit secured its first full EPCM delivery contracts in North America during the period. As a group, we successfully secured $781 million in new contracts and extensions, which has improved our existing backlog to $885 million. At DRA, our people are at the heart of our business, and we continue to focus on attracting, growing, and retaining the best talent to build and complement our high-performing teams. Our group seeks to empower our people through a strong focus on leadership development and career path progression. We are deeply aware of social, environmental, and economic disparities in the places where we operate. It is important to us that we strive to leave a positive legacy by supporting local employment, enhancing livelihoods, and contributing to the improvement of local communities. To achieve this, DRA takes active steps to invest in the local communities, working closely with our clients in the areas in which we operate. DRA is well placed for a positive year ahead. Our people are focused on delivering exceptional outcomes for clients, building our pipeline, and sustaining our operational performance across the group, which will allow us to establish long-term balance sheet strength and enhance shareholder value. For FY24, we will continue to pursue profitable growth across our operations and business units, with initiatives targeting improved employee retention, broader regional growth opportunities, targeted investment in innovation, and ensuring the ongoing delivery of high-quality services to our clients. Our forward-looking pipeline is underpinned by our strong commitment to our loyal client base. We now have over $4.1 billion in opportunities at various stages of development, distributed between our projects and operations divisions. We remain focused on our core EPCM and O&M capabilities, where we are confident we can add significant value to our clients while contributing to grow our business and improve quality of earnings. On behalf of the executive team at DRA Global, I want to thank our dedicated group of people around the globe for their continued hard work and commitment to our business and our clients. As our prospects continue to grow in 2024, we look forward to a safe and productive period ahead, where we will endeavour to turn the future of mining into reality. Thank you.